Master the 6 Basic Rules of Investment by Robert Kiyosaki. Are you tired of feeling lost in the vast and unpredictable world of investments? Do you dream of gaining financial independence and making your money work for you? Well, get ready to unlock the secrets of successful investing as we delve into the captivating realm of wealth creation with none other than the legendary Robert Kiyosaki. In this game-changing YouTube script, titled Master the 6 Basic Rules of Investment, we'll guide you through a transformative journey, revealing the essential principles that can revolutionize your financial future. Buckle up and prepare to embark on a thrilling adventure where you'll learn how to navigate the markets, seize profitable opportunities, and embrace a mindset that will set you on the path to becoming a true investment master. Investing rule number 1. Know what kind of income you're working for. Imagine this. You wake up every morning with a clear purpose, knowing exactly what kind of income you're striving for. No more wandering aimlessly through life, unsure of your financial goals. In the captivating world of investments, Robert Kiyosaki emphasizes the importance of identifying the different types of income and understanding how they can shape your financial destiny. Let's delve into the first rule, where we explore the power of knowing what kind of income you're working for. There are 3 main types of income: earned income, portfolio income, and passive income. Earned income, also known as a paycheck, is what most of us are familiar with. It's the money we earn by exchanging our time and skills for a salary or wages. On the other hand, portfolio income is derived from paper assets such as stocks, bonds, or mutual funds. It can provide a steady stream of income through dividends, interest, or capital gains. However, the true game changer lies in the third type: passive income. This is the holy grail of financial freedom, where your money works for you, generating a consistent cash flow without requiring your active involvement. Passive income can come from various sources, including real estate rentals, business ownership, or royalties from creative works. By understanding and prioritizing passive income, you can break free from the cycle of trading time for money and embark on a journey towards true financial independence. Investing rule number 2. Convert ordinary income into passive income. What if you could transform your hard-earned money into a stream of passive income? That's precisely what Robert Kiyosaki's second rule of investment teaches us: the art of converting ordinary income into passive income. Buckle up and get ready to revolutionize your financial journey as we explore this exciting concept. In the traditional world of employment, most people rely solely on their earned income, which offers limited potential for wealth accumulation. However, by strategically diverting a portion of your earnings towards creating passive income streams, you can supercharge your financial growth. So, whether you choose to venture into real estate, explore entrepreneurship, or dive into other avenues like royalties or licensing agreements, the key is to shift your focus from relying solely on earned income to proactively creating passive income sources. By doing so, you'll be on your way to mastering the art of financial freedom, where your money tirelessly works for you, freeing up your time and opening doors to limitless possibilities. Investing rule number 3. The investor is the asset or liability. In the exhilarating world of investments, Robert Kiyosaki's third rule challenges us to take a deep introspective dive. He emphasizes that as investors, we ourselves are the greatest asset or liability in our financial journey. Let's explore this unique concept and uncover the power that lies within. To become a successful investor, it's crucial to develop the right mindset, skills, and knowledge. This begins with self-awareness and a commitment to personal growth. Kiyosaki highlights the importance of continuously investing in ourselves, whether it's through expanding our financial education, honing our analytical skills, or cultivating a resilient mindset. On the flip side, failing to invest in ourselves can lead to becoming a liability. This occurs when we lack the necessary knowledge and skills to navigate the complexities of investing, resulting in poor decision-making and missed opportunities. Kiyosaki encourages us to take ownership of our financial destiny by actively investing in our growth, ensuring that we're equipped to make sound investment choices and capitalize on wealth-building opportunities. Investing rule number 4. Be prepared. In the fast-paced and unpredictable world of investments, being prepared is the key to seizing opportunities and managing risks effectively. Robert Kiyosaki's 4th rule urges us to adopt a proactive mindset and take the necessary steps to ensure we are ready to capitalize on the ever-changing investment landscape. let's explore how being prepared can set you on the path to investment mastery. Being prepared involves staying informed and staying ahead of the curve. It means keeping a finger on the pulse of the markets, understanding economic trends, and monitoring the performance of your investment portfolio. This awareness allows you to make informed decisions, identify potential investment opportunities, and adapt your strategy as needed. Additionally, being prepared involves having a solid financial foundation. This includes maintaining an emergency fund to weather unexpected financial storms, managing your debts responsibly, and having a clear understanding of your risk tolerance. By having a strong financial base, you'll be better positioned to navigate market fluctuations and take advantage of lucrative investment prospects. In the world of investments, opportunities can arise at any moment. By being prepared, both mentally and financially, you'll position yourself to make informed decisions and capitalize on these opportunities, setting yourself up for long-term success. Remember, preparation is the key that unlocks the door to prosperous investment ventures. Investing rule number 5. Good deals attract money. Robert Kiyosaki's 5th rule of investment unveils a powerful truth. Good deals have an irresistible allure that attracts money. In this captivating principle, we'll explore how identifying and seizing lucrative investment opportunities can unlock the gates to financial abundance. In the world of investments, a good deal refers to an opportunity where the potential for profit outweighs the associated risks. These deals can arise in various forms, from undervalued stocks and promising startups to discounted real estate properties and business ventures with high growth potential. When you spot a good deal, it possesses an inherent magnetism that draws the attention of investors, partners, and financiers. The allure lies in the promise of significant returns on investment, which ignites the desire to participate in the wealth creation journey. As word spreads about the opportunity, money begins to flow towards it, fueling its growth and amplifying its potential. Furthermore, cultivating a strong network of like-minded individuals and investors can greatly enhance your ability to discover and participate in good deals. Collaborating with others who share your investment goals and interests can lead to valuable insights, joint ventures, and access to exclusive opportunities. Investing rule number 6. Learn to evaluate risk and reward. In the realm of investments, understanding the delicate balance between risk and reward is paramount to achieving success. Robert Kiyosaki's 6th rule guides us to master the art of evaluating risk and reward, allowing us to make informed decisions and navigate the intricacies of the investment landscape. Every investment opportunity comes with a certain level of risk, ranging from low to high. Risk refers to the possibility of losing some or all of the invested capital. On the other hand, reward represents the potential for generating profits or returns on investment. To become a skilled investor, it's crucial to assess the risk associated with an investment opportunity and weigh it against the potential reward. This involves conducting thorough due diligence, analyzing market trends, and understanding the factors that can impact the investment's performance. By evaluating risk and reward, you can align your investment decisions with your financial goals, risk tolerance, and investment timeline. This allows you to make informed choices that maximize the potential for returns while managing your exposure to risk. Additionally, diversification plays a vital role in managing risk. Spreading your investments across different asset classes, sectors, or geographical regions can help mitigate the impact of individual investment losses and increase the potential for overall portfolio growth. Mastering the art of evaluating risk and reward is an ongoing journey that requires continuous learning, adaptability, and a willingness to embrace calculated risks. By developing this skill, you'll navigate the investment landscape with confidence and increase your chances of achieving long-term financial success. As we conclude our captivating exploration of Robert Kiyosaki's 6 basic rules of investment, you now possess the tools to embark on a transformative journey towards financial mastery. From understanding the different types of income and converting ordinary income into passive income, to recognizing yourself as the ultimate asset or liability, and being prepared for the opportunities that lie ahead. These rules serve as guiding principles on your path to investment success. Remember, good deals attract money, and learning to evaluate risk and reward will empower you to make informed decisions that align with your financial goals. Now, armed with knowledge and inspiration, it's time to step into the realm of investments, seize opportunities, and unlock a future of financial abundance. The journey begins now. Go forth and master the art of investment with confidence and determination.